How worried are you that the trade tensions, or if you want to call it a trade war, how worried are you that it could usher in a very difficult time for equities in the U.S.?
So, well, if the underlying economy wasn't doing as well, and if we didn't have the stimulus, both tax and budget deal, I think there'd be a lot more to worry about. The U.S. economy, I think, in the second half is going to accelerate as opposed to decelerate. So whatever pressures we face on the trade side, I think we are in a much better position to absorb it. So yes, am I worried? I am. However, I don't think I'm so worried that I have to change my outlook meaningfully.
Okay.
Equities still will do, if you have a long enough horizon, that is year end or a couple of years, I think equities will still do very well in that environment.
Mark, so Krishna sees the threat, but he sees countervailing factors kind of overweighing that threat. How do you feel?
I think, Tyler, I generally have sympathy for that sentiment. I mean, the fact is today we just got an update from the Atlanta Federal Reserve's GDP Now tracker showing 4.7% growth here this deep into the second quarter. And so we're experiencing some not only acceleration in economic activity, but pretty strong inertia going into the second half of this year. I believe, though, that concerns about trade are a non-trivial risk. If we do see tariffs applied on 25% of $50 billion of imported goods, that'll shave a tenth of 1%. If we see 10% on $200 billion, that'll shave another tenth of 1%. But the spillover effect to business and consumer confidence is what worries them. And so the concerns for me are how this metastasizes going forward. Does it resolve itself by way of a negotiated outcome that allows both parties to walk away claiming some level of victory? Or is this something that we continue to have to deal with on a day-over-day basis, incurring tape bombs along the way that disallows equity investors from getting enthused about the underlying strong fundamental conditions that support corporate earnings and therefore should support and advance in equity prices?
And then you throw into this big mix here, the Fed, Krishna. I mean, it seems like perhaps the risks could be to the downside. How do you think about markets and how we are valued given the potential escalation of this trade dispute or whatever you want to call it, and also tightening monetary policy?
On a perverse level, you know, the trade war actually gives the Fed relief a little bit. That is, if we believe that the trade wars or anything along those lines can take off a few tenths of a percentage point of GDP growth, and it takes off inflationary pressures a little bit because of that, I think the Fed sees less reason to tighten. So I think it prolongs things rather than curtail things. Having said that, I think that having concerns about trade war is required. However, I think you have to sort of imagine a scenario where things get negotiated. And if you can think of North Korea and dictators from North Korea and Trump holding hands
on that note, Krishna, Boeing is off almost $15 today. Either one of you look at that and go, that's ridiculous. I mean, you could swoop in there and get it cheap compared to where it was just a few months ago?
Yes. So, again, the valuation levels in emerging markets, for example, have become extraordinarily attractive as a result. U.S. growth is good. Emerging market growth will be decent. Fed may stop, I think, as a result of pressures building. I think all of it, if you put all of it together, things are not all bad, despite the rhetoric that you hear in the marketplace.
Oh.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.